Welcome back to the Iraqi Dinar channel, your number one source for real-time updates, breaking news, and inside scoops about the Iraqi Dinar, the Vietnamese Dong, broader story of the global financial reset that has captivated investors for decades. Today's update carries a particularly strong sense of urgency because we are unpacking exclusive intel tied directly to the International Monetary Organization. Whispers from trusted Middle Eastern banking analysts, signals from leaked financial documents that point toward the potential publication of a new Iraqi dinar exchange rate sooner rather than later. The journey to this point has been long and uncertain, marked by years of speculation, false starts, and quiet anticipation. The latest developments suggest that the moment may now be moving from possibility into probability and perhaps even into immediacy. For more than 20 years, countless market watchers and currency investors have studied Iraq's unique post-war financial restructuring, debating when the dinar would finally break free from its imposed program rate, a system that has kept it artificially suppressed far below the country's actual economic potential. During this period, mainstream financial media has largely ignored the story, preferring to focus on more conventional narratives of global markets and established currencies, while those with an eye for anomalies recognized that Iraq's situation was unlike any other in modern financial history. Iraq's economy, fueled by oil wealth and vast untapped resources, remained shackled to a currency that did not reflect its true strength, creating one of the most striking examples of distortion in international finance. The frustration for investors has been in watching a nation with such potential be locked into a currency system that did little to reward its growth or to represent its genuine value on the global stage. Yet, in recent weeks, chatter emerging from the inner circles of international monetary policy has shifted tone dramatically, with credible voices suggesting that what has been delayed for years is now under active review in real time. According to sources familiar with the matter, the International Monetary Organization has entered the final stages of reviewing figures that could underpin the first major revaluation of the Iraqi dinar since its artificial peg was imposed. The IMO's role in overseeing macroeconomic frameworks and ensuring global stability means that any action it takes has far-reaching consequences. Reports circulating among insiders reveal that the organization is not merely studying Iraq's economy from a distance, is actually reviewing detailed proposals and valuation scenarios that could soon translate into official changes. Insider is even quoted as saying that the valuation proposal for the dinar is currently undergoing financial review and may be published as early as this quarter, collapsing what many believed was a timeline measured in years, or at least many months, into one that could now be counted in weeks or even days. The potential for such a dramatic acceleration has lit a fire of interest across investment circles, prompting serious discussion about the implications of a new exchange rate becoming reality in the very near term. The implications extend well beyond rumor or speculation. For the first time in years, credible document described as a high-level financial review is being discussed by regional analysts who suggest that the case for revaluation is not only on the table, but being actively prepared for possible implementation. This draft acknowledges directly the artificial nature of the dinar's peg to the US dollar, mechanism that has been criticized by economists for stifling Iraq's ability to discover the true market value of its currency. Recommendations within this document suggest moving Iraq toward a managed float system an approach that would break the currency free of outright suppression while still providing oversight and protection against sudden volatility shocks. Emphasize that this is not a call for an uncontrolled free float, but rather a structured, tiered system designed to ease Iraq into transparency and strength without destabilizing its economy in the process. The idea of a managed float reflects the seriousness with which the situation is being treated and the level of planning that is now associated with Iraq's potential revaluation scenario. The draft report now circulating the list details yet about how Iraq things would unfold and why the timing may finally be right for such a dramatic change. For such a dramatic affairs, such smooth change. It outlines recommendations that would move the dinar away from its rigid peg to the US dollar and into a managed float system that balances freedom of value discovery with protective mechanisms to avoid market shocks. Specifies that Iraq would begin with an institutional rate, a controlled valuation that represents a massive leap from current suppressed levels, while still giving international bodies confidence in the stability of the shift. It further recommends layers of safeguards, including gold reserve backing, oil revenue security mechanisms, compliance with IMF guidelines to ensure that Iraq does not fall into the same cycles of crisis that plague its economy in the past. Economic conditions are also lining up in ways that make revaluation not only possible, but increasingly necessary. Oil prices above 100 a barrel have filled Iraq's coffers with export revenues not seen in over a decade, giving the Central Bank of Iraq more than 120 billion in reserves to defend any new exchange framework, has simultaneously built up gold holdings of more than 130 tons, providing a hard asset foundation that adds credibility to its currency. Political stability has improved under Prime Minister al-Sudani with reforms aimed at combating corruption and restoring investor trust. Alongside these measures has been modernizing its financial infrastructure, piloting digital payment systems, testing blockchain-based bonds, adopting fintech tools that prepare its markets for integration with international systems. These coordinated steps are evidence of a country deliberately preparing itself for reintegration into the global financial community and for the kind of structural currency reform outlined in the draft report. If Iraq follows through with the reforms outlined in the draft report, several rollout scenarios are being modeled by international banking institutions, each with different implications for investors. The first scenario under discussion is an institutional rollout, where major global banks such as Wells Fargo, HSBC, Chase would be granted early access to an institutional exchange rate projected in the range of 180 to 2.35 per dinar, with the possibility of contract rates extended to tiered investors under non-disclosure agreements. A second scenario envisions a public Forex launch in which retail investors gain access within 72 hours of the official announcement. Projections placing the dinar in a range between 1.90 and 325 initially, with the potential to rise as liquidity stabilizes. Third model suggests a managed float controlled by the Central Bank of Iraq. Incremental weekly adjustments gradually move the rate upward until it stabilizes around 3.70, a slower but potentially safer path modeled on emerging economies that have undertaken similar reforms. For investors, preparation is a key factor in ensuring success regardless of which pathway is chosen. Authenticating physical notes with ultraviolet scanners or watermark readers, securing redemption appointments in advance for structured payouts or higher rate opportunities, obtaining professional tax advice are critical steps that cannot be overlooked. Scams remain a risk during moments of transition, making it essential to rely only on major banks or officially sanctioned redemption centers. Equally important is staying plugged into verified information channels, since misinformation tends to spread quickly in volatile markets. On a broader level, the revaluation carries implications beyond profits and capital gains. A stable, revalued dinar could change the perception of Iraq globally, transforming its currency into a symbol of resilience and sovereignty while attracting investment, trade, and renewed confidence in the nation's economic trajectory.